Good evening. Welcome to the Hurley Investments Market View Commentary for Tuesday, the 29th of January. My name is Kevin Hurley, and this is going to be a bit of a quick one. This one I'm going to try to do in a quick 30 minutes. I've just been traveling. In all honesty, I am exhausted sitting out here in wonderful, very chilly Denver, Colorado. We have about, it looks like 18 of us here. 6 of you are answering questions. So feel free to type in any questions you have, but let me go over what I see, what we're going to do, and a couple things that just felt were important for you today. What I'd like to talk about today are 3 quick points, and they're pretty easy to understand. I've gone over them, and it's the last time I'm going to focus on it today. Fundamentals. If you don't spend your time on the fundamentals, you can't expect to be successful in the stock market. What do I mean by fundamentals? Ask yourself, are you doing your weekly research? Something I might ask, what's some of the more important events that are happening this week? Is it Apple's earnings? The FOMC conclusion tomorrow? In all honesty, I wonder how many of you knew that you'd have the FOMC meeting. I wonder how many of you thought you'd be paying attention to Apple's earnings. Wondering how many of you have questions in regards to why our market moved on Monday down 250 points, yet up or flat slightly today. Larry, looks like you have a hand up. If you go to the question section, you can type in any questions that you have, and I'll get those answered for you. But plain and simple, if you're not doing your market research, if you're not going over what economic reports are happening, if China numbers come out this week from all 3 sources, then you won't know. It's not fair to say you won't know. Then you haven't put the work in to understand or know what's going on. I talk to people all the time. Hey, what were the consumer confidence numbers that came in today? Hey, what were the Case-Shiller numbers that came in today? And I hear a lot of, well, I don't know. How much was the market up or down today? Well, maybe this, maybe that. If you don't put the work or effort in to prepare yourself for the week and then follow that research that you've prepared, who are you kidding to think that you're going to be successful in the stock market? It won't happen. It's someone wishing to do as little as possible and expecting to be a professional or to be able to make money in the stock market. It just doesn't work that way. So my number one point, are you doing the work that's required if you do plan on paying attention and trading in the stock market? Are you focusing on those things that you need to know? Can you answer if things are happening and what's happening in the market if you're paying attention to it? Really, I see too many people that aren't willing to do the little detail work that, in all honesty, preps you or prepares you to weather the storms on any one single given day or throughout the week. If you're not going to do the work, don't expect to be constantly profitable in the stock market. It will not happen. which goes to point number 2. How are you protecting your investments? And this came from a question today. And I see them here. Question today from a client. How are you protecting your investments? Are you doing it through diversification? Well, we've seen that really didn't work too well in 2008 and through multiple other times. Are you doing it through asset allocation? Watching oil, gas, gold all go down at the same time, as well as your stock market positions. Really, you need to define a system that will protect your investments, and you need to stick by it. And not only that, you need to understand the pros and cons of your system. One of the pros and cons for options is it can make up some of the downside movement. And being able to make up some of the downside movement, you have to have protection on. And it was quite interesting. Someone that I know cares more about their money than I do gave me a call and said, Kevin, you don't have protection on Visa yet. And I'm thinking to myself, I'm a little tired. Spent a couple long nights driving from Dallas to Houston and arriving at my hotel at 2 a.m. I thought Visa was at Wednesday after the market closes. And the client asked me very politely, why don't you have long put protection on? Well, I've learned forever ago. Guess what? Stocks fall a lot faster than they go up. Kevin, why are you willing to protect in earnings? Because stocks fall a lot faster than when they go up. It was funny because I then made a quick call to Keeve and said, Keeve, don't you have the position set and ready to go? And Keeve was like, of course. In fact, because of some of the financials and how well some banks or lending is doing, we're also set for a collar trade. We're set for a collar trade to take advantage of Visa going up from the 135 range up to 150. And he had the positions ready. He just hadn't pulled the trigger. We were waiting till the last hour of the market, where things have been coming back that last hour for the past week and a half. And he triggered our collar trade, a March 135 long put and an April 150 short call. He did let me know not all positions are in, but we're going to work on putting our positions farther out in time so volatility crush doesn't hit us. We've learned through time that we want to get a little bit of credit in there. And what Keeve's numbers come out to be is you're going to make about $12, $11.75 to $12.25 for somewhere between a 3 1/4 to a 2.75 credit. So he's in that 4-to-1 to 5-to-1 risk to reward ratio. I said, Keeve, I like it. Just make sure you're on it and it gets done. A lot of people ask me, Kevin, you call or trade? Call or tarde? Call or trade? Because I don't think I know everything. Because stocks fall much faster than they go up. Because I want, as I really put that on all capital letters, I want to amass a huge amount of shares over my lifetime for covered calls and dividend payments. And in all my research through 20 years, this is the best way I found to do it. Which makes my final point. Point 3, most important. Anything you make up on the way down and then convert to new shares lowers your cost basis, makes more to the upside, and for me, because believe it or not, I'm not sitting on tens of millions of dollars, and allows me to weather the new normal / volatility. I'll be honest with you. If I saw huge losses in accounts, 25%, I'd freak out. I'd worry about it. I would know that things are not working the way I have planned, and it would stress me out. I enjoy seeing stocks lose 40% or more. Knowing what I've made it to the downside and where I can add more shares will make it easier for me to be profitable quicker than everyone just sits and holds. I enjoy the use of options. I like using derivatives to help me make more money to the upside through leap long calls and through protecting my stock ownership. I'm totally okay with my system because it allows me to be wrong. It helps me lower my cost basis. I can dollar cost average without having to spend more money or invest more money. And most importantly, I can weather the storms that are in the market. With that said, where will our market end this week? I'm going to say higher. That's on Apple's back. If we look at the Dow Jones Industrial Average, right now, we are bullish. There's something interesting with, you know what? Let me go down to the S&P. Nope, I'm going to stick on the Dow. We're bullish, pretty easy to see, but I have some warnings that are going to be flagged. We're running in between the 200-day and the 50-day. We can't seem to get a hold of the top side of the 200-day simple moving average. The 200 right now is acting as a resistance level. I would say there's a good chance it can go higher, but when I look at the Williams percent R, a median statistics, a view of how big money or institutional money is putting it to work, they spent a lot of their money. I'm not sure earnings will push us above our resistance level on the Dow Jones Industrial Average. I'd like to hope so. But technically speaking, looking at a chart, I'm not seeing higher highs and higher lows. I could be seeing the building of a base, though, where we might go sideways for a month or so, which I'd be okay with that. But right now, the 200-day simple moving average is acting as resistance, and we're trading in a pretty tight range between the 50-day and the 200-day. The S&P worries me even more. Yes, we're bullish. Pretty easy to look at a chart and see it. We have more of an opportunity to move higher. Yes, we're building a base. Yes, we're passing in between the 200 and the 50-day. But our 50-day is widening, where the trend might be sideways to lower. We're not testing the 200-day. We already have come off of big money, putting extra money to work. and I'm seeing just a bend in the MACD, just a bend on the RSI. It also looks right now, not trying to outguess the market, but technically speaking, the S&P looks like we're ready for a breather instead of going higher. In fact, we haven't even come close to testing the 200-day simple moving average yet. So here we've had this big run, but we can't even test resistance. And then obviously the same thing with the NASDAQ. We are still bullish, but it looks the worst out of the three. Widening 50-day between the 200. Still haven't come close to testing the 200 in that 7452 range, 7450 range. We've had a couple bends in our MACD. In fact, we're way off of institutional money be putting money to work. Have the bend and touching the RSI. It looks even worse on the NASDAQ for having a prolonged run in our stock market. I still am looking at a positive January, 2.5%. We might have quite a bit more than that, but I'm not saying we can't give a lot of that away in the last 2 days. Quite a bit of earnings. Over 100 S&Ps are coming this week. There are bellwethers all over the place. Bellwethers with Apple today, Microsoft tomorrow. We have Tesla tomorrow, which won't bode well. Visa and Facebook, which are some that I trade. Boeing reports tomorrow. AT&T reports tomorrow. I'm paying attention to Baba for Alibaba, trying to give me a sense of what Baidu might do. Thursday, I probably had that wrong, but Thursday, Celgene, ConocoPhillips, GE, MasterCard, Sprint, UPS, Amazon. Friday, ExxonMobil, Chevron, Honeywell, Dominion, JCI. Quite a few stocks are going to be coming through with their earnings, and it'll be plain and simple. It's going to be a busy end of the week, a busy close to the month of January on Thursday. I would not necessarily expect to see a sell-off of mutual funds or so forth, but I will tell you, do be careful. You don't really, how do I say it? There's enough uncertainty that you don't want to hedge your bets one way or the other. You do want to be neutral. That's what I'm trying to say. You do want to be neutral. Be neutral so that you're going to be plain and simple, so that you're going to be in good shape to, I'm not saying this right. Be neutral so you don't get taken to the woods. That's what I'm trying to say. So many are coming up. There's so many things that can happen right now. Be neutral. Don't expect everything to go right up. Don't expect it to go right down. Hedge your bets to the upside and the downside so that you're going to be safe. A lot of economic reports. ADP employment tomorrow, pending home sales. We had consumer confidence that came in lower than expected, 120.2 versus a 126.1. Case-Shiller also came in at 4.7 instead of a 4.9. Looking at Thursday, personal income, personal spending will be heavily scrutinized. Employment cost index. Friday, we have the average work week. Non-farm payroll, private payroll. It's pretty interesting. Here the government's gone to a new way to look at, how did I say it? A new way to look at trying to be more accurate in their expectations or their pre-announcement of what the non-farm payroll may turn out to be. And ADP has been so far off from non-farm payroll. I don't even know why they did anything. I don't even know why they messed with it. Makes no sense. Internationally, a lot of China numbers coming out. Manufacturing PMI It's going to be important considering that they're looking at how the market's going to react to a slowing China, how China is going to be down from a 6.6 year over year growth, the lowest in 20 years or something like that, to what the projections are for next year. Pretty interesting. Mushin came out today and said that you could look and expect to see some better news coming in our China discussions, in our China trade. I don't want to say balance, trying to work things out with China on our trade agreements. I don't know if it's enough to expect big movements from our market. I don't know if he was just saying it because Trump said, hey, go spread some good news out there. We need it. It'll be interesting to see where we end up with any news that comes out. We still do have some earnings coming through this week. Plain and simple, pay attention to obviously Apple, AMD reported today. Tomorrow you'll see Visa, Facebook, Murphy Oil, Cree, Microsoft will report, Tesla will report. You might see a draw on some of those movements on stocks. You can also expect, and I would look for, maybe some stocks that typically aren't bellwethers to get some attention, to get some movement that, hey, I don't know if you've noticed this stock. You might want to look at this stock now moving. I think you'll see some attention from some stocks that typically aren't bellwether stocks be spoken of more often on the talking heads. I think they're going to try to find, and I don't mean to be negative here, but I think they're going to find reasons why our stock market should not be going up versus reasons why it can be going up. And it just seems the tone is turning a little bit negative. So pay attention to it. Pay attention to it. Be ready for it. Don't worry about it necessarily. Hopefully our market will continue to move on fundamentals. But listen to the rhetoric as it's coming out and see if you don't agree with me that, hey, it seems to be a little skewed to the downside. It seems to be a little more, hey, things are not going the way we have planned. And tell me if you don't see the stock market focus more on the negative than the positive coming up here. Just pay attention to it. Just notice it if it comes across. I would definitely tell everyone that we still have some volatility. We don't have everything all figured out. We're going to go through some volatility. Don't be surprised to see the market move more than you expect, in ways maybe you don't expect, in ways that you obviously need to be paying attention to, because you're going to get caught with some headline risk that will affect our market, and it'll change the way that maybe you look to protect. You need to be smart on how you're you're not getting caught up in everyday movements and not trying to trade everyday movements. I obviously put some information here on Apple. It was not a great earnings event. It was down year over year. It was off from its projections. It was off from the original expectations from the analysts. But giving Cook a little bit of credit, I don't want to give him too much. He did pre-announce, knocked Apple down from 185 down to 142. After hours, taking a quick peek at Apple, it is sitting at, looks like it's at 163.52, up $8.82. Actually, 163.50. So I'll be interested to see if the next month it can gain 180, 185 again. Probably not, but at least Cook was proactive. I don't like the way he runs the company. I don't like the way he does most of what he does. Can't believe they can't come up with a new product. Can't believe how much money they spent on automation. But with that said, I do have to give him credit that today his pre-announcing helped, even though it did cost him, $43 to the downside. Going on take your time to read about it. Government shutdown costs $3 billion in permanent losses. Be prepared on the 15th to possibly go through another government shutdown, or maybe Trump will say, you know what? If you're not willing to work with me, I'll take care of it myself. He'll do an executive order, and we'll get our southern border, for all intents and purposes, for the first time ever. What's the word I'm looking for? Southern border is going to be, and I can't think of the word I'm looking for. So when I figure it out, I'll remember. Southern border is going to be. I can't figure it out. Interesting article on Bank of America after their earnings. Some things to remember on why I'm so bullish on Bank of America. And I had a really good article here about Visa. One more way that they're increasing their margins using their system down in South America, as well as all that they've done through Visa Europe. With that said, I was going to tell you it's going to be a little bit quick one. I'm a little tired. It's right on the nose at 6:30. Any questions you guys have that I can do my best to answer for you? Secure the border. That's the word I'm looking for. A border that's secure. Took me a second to figure that one out. Obviously, you can tell I'm a little more tired than I thought I was. Any questions you guys have? Steve, is now the time to enter Apple? Steve, I'm just going to put this out that one day doesn't make a trend. If I was looking at entering Apple, I'd probably enter on a bull put strategy, and I'd probably be looking at the 160, 157.50 odd week options expiration, where I'd take a credit in to see if it can sustain and hold its profits after hours. Just remember, after hours doesn't guarantee anything tomorrow. So if you were looking to get into Apple, I would start off with a bull put spread that you're willing to continue to move that short up and up and up and chase it to the point where it ends in the money and you can get it, 2 to 3 weeks down the road just before options expiration as it gets assigned to you. I would not jump in tomorrow, buy the stock, go all bullish. I was trying to tell that to you earlier. It just doesn't make sense, though. Obviously, a couple cliches for you. One day doesn't make a trend. After hours doesn't guarantee tomorrow morning's open. You just got to be smart. There's still a lot of volatility in our market where when we're run by headline risk, maybe it doesn't matter so much where the earnings are. Maybe it doesn't matter so much how good earnings event they had, and it matters what the market is telling you that day. So be careful. Are there any other questions? With that said, it doesn't sound like it. You guys have a great evening. I appreciate you being here. Earnings are coming up. Pay attention to earnings and how they're going to be moving your stocks. Ooh, we do have a question. Let's get one more question. It looks like it just came in. And it was actually just a thanks. Thank you for saying thanks. You guys take care. Have a wonderful evening. I look forward to seeing you next week. Next week, I will be starting my chat session on a Monday. I will most likely have a Tuesday opportunity session and a Thursday, oh shit, nothing's working for me session. And we'll make sure that we get everybody helped out here. Again, take care. Have a good evening, and I look forward to talking to you next week. Bye-bye.